Hello students, in the last video we have completed the accounting treatment of goodwill in case of admission of partner. In this video I am going to talk about accounting treatment of goodwill in case of change in profit sharing ratio. Let's start. So, why there is a need to calculate the goodwill in case of change in profit sharing ratio is basically the question. So, when I say accounting treatment, sometime what happens when it becomes necessary to change what existing profit ratio in case what change in the participation or capital contribution, right? Change in capital contribution or active. If some of the partner has contributed additional capital of more, right? If they have contributed more money, so there is a case that the person who is contributing more money should get more profit share, right? And so is the case that active participation. Some partners may be working partners, some may be not working also. They have just contributed the capital. So, they should not be given more profit share. So, that is the main reason where the change in profit sharing ratio happens. So, what happens when they change the profit sharing ratio? Some partner will lose, some partner will gain. When we studied admission of partner, it was not the case because the person who was entering was the only person who was gaining. Okay, but in case there is a change in profit sharing ratio, there is the existing partner who will be gaining, there will be an existing partner who will be losing. So, to compensate and to maintain the equity among the partners, we need to calculate goodwill. Okay, and amount of compensation is calculated and gaining partner is going to pay the money to the sacrificing partner is the concept. Okay, then how do we record the journal entries is the question. At the end in exam, they will ask you how will you pass the journal entry. For that, I will be providing you the steps like we understood in the methods also what are the steps in valuation of goodwill. Okay, so steps in treatment of goodwill. Step number 1 is calculation of goodwill of the firm. We have understood in the previous videos there are 3 methods: average profit method, super profit method and capitalization. Under capitalization method we have 2: capitalization of average profit, capitalization of super profit, depends on the question. Okay, once you know the goodwill of the firm, the step number 2 is to calculate the sacrifice ratio and gain ratio. What is the reason? Basically, in change of profit sharing ratio, there are going to be the existing partner, one will be suffering loss, other will be gaining. So, you need to calculate sacrifice ratio, you need to calculate gain ratio. Question is how to calculate it? It is calculated by the formula. If it is a gaining ratio is given by the formula new profit sharing ratio minus the old ratio. Secondly, when you need to calculate sacrifice ratio, if you remember in last video, I have told you how to calculate sacrifice ratio. It was old ratio minus new ratio. The formula remains the same. Just addition is what? Gaining ratio, because in this case, existing partners are going to gain. Okay. The step number 3 is basically what is the amount payable. See, when you evaluate the goodwill, it is the goodwill of the entire firm. We want to know how much the gaining partner is going to pay to the sacrificing. Entire amount no one is going to pay, right? So, once you know goodwill of the firm by step number 1, sacrifice ratio by step number 2, you can definitely calculate the amount which is receivable to the sacrificing partner and reverse amount which is payable by the gaining partner. Basically, debiting the gaining partner and crediting the losing partner or sacrificing partner. So, finally comes the journal entry. So, step number 4, you require to pass the journal entry. So, if you see, as I told just now, gaining partner is going to pay to the money to the sacrificing partner. So, the gaining partner's capital or current account will be debited. Why current account? If they might be following which method? Fixed capital method. So, you need to debit fixed capital method. Okay. So, you need to debit the current account instead of capital account. That is the reason. On to credit sacrificing partner's capital or current account. Finally, the narration part being goodwill adjusted made in change in profit sharing ratio. So, these are the 4 simple steps in which you can pass the journal entry using the 4 steps. Simple. To make you understand in a much better way, let's solve a illustration. Okay. Let's read the question. So, A, B and C are the partners sharing the profit sharing as what? 4:3:3. So, these are the existing partners. They have decided to change the profit sharing ratio as 7:7:6. Okay. The goodwill of the firm is 20,000 rupees. You are required to calculate who is gaining, who is sacrificing, and finally passing the necessary journal entry. This will be the normal question asked to you in the exam. Okay, let's recollect the steps. Step number 1 was what? Calculation of goodwill using the methods. Now, if you read in this question, the value of goodwill of the firm is given to you. So, my step number 1 is done. I can readily write here rupees 20,000 as my goodwill value, right? Step number 2 was calculation of gain ratio and sacrifice ratio, but obvious, one is going to gain, other is going to sacrifice. So, you can use either of the formula, because if you get the minus answer means it is a gain for the partner. I would be using the sacrifice ratio formula. What is the formula to calculate sacrifice ratio? It is old ratio, right? Old ratio minus new ratio. Okay. So, in this case, you are going to calculate ratio of each partner. In my case, there are A, B and C, 3 partners, right? A, B and C. Let's check what is their old profit sharing ratio, that is 4:3:3. That means, can I say 4/10, 3/10 and 3/10? Simple. And to this, I will be deducting the new profit sharing ratio. New profit sharing ratio which they are going to change is 7:7:6. If we total, we get the denominator as 20. So, the next step is 7:7:6. So, 7/20, 7/20 and 6/20, right? Then you take the LCM. Yes, you take the LCM. Finally, what do you get? 8 minus 7 upon 20, that is 1/20. Okay. Then, in this case, how much do I get? Again, I'll multiply 3/2, 6 minus 7 upon 20. I'll get minus 1/20. Okay. And finally, C. In this case, again, I will be multiplying the 3 by how much? 2. So, 6 minus 6 upon 20. That is what? 0. Anything numerator divided by the number, that is 0 divided by the any number, is 0 only. So, in this case, I can say C has neither gain, C has neither loss. And we have got a negative answer for B. So, can I say B had gained and A had sacrificed? Yes. So, whose account will be debited and whose account will be credited? A's account will be debited, B's account will be credited. Yes? No. B's account will be debited because he is gaining. The gaining partner's account has to be debited and sacrificing partner's account will be credited. So, let's see the step number 3. In the step number 3, we need to calculate the amount which is payable to the gaining and sacrificing partner. Since we have only 2 persons who is gaining and sacrificing, like A is sacrificing. Okay, 1/20 he is sacrificing. So, my goodwill amount multiplied by the sacrificing ratio, that gives me how much? It gives me 1,000 rupees as A sacrifice and 20,000, but obvious, the amount is going to be same, right? Finally, you need to pass the journal entry. So, in our case, A is sacrificing, A's account will be credited, B is gaining. So, B's capital account will be debited by how much rupees? 1,000. And A's capital account will be credited, reason being A is losing or sacrificing. Okay. So, finally, 1,000 will be credited to A's account, and in the narration you write being goodwill treated due to change in profit sharing ratio. Okay? And my question is over. Fine? Easy? So, in this video, we have understood how do we treat goodwill in case of change in profit sharing ratio. In the next video, we will be understanding the final thing, that is what will be the treatment of goodwill in case of retirement or death of the partner. So, stay tuned. Thank you.